Hey everybody, welcome back. S&P 500, you can see it right on the screen. I want to go through this before we get into a lot of other things. We did this pre-market for everybody, and I just want to show this level and how it held. So you've watched this on the 1 minute. Let's drop this to a 5, and then we're going to zoom out. This was the level that we talked about this morning pre-market, and then you can see how it held. Now we do the public pre-market live, and that's what I'm referring to. For those that are new, what we do is we follow through the week. We do a pre-market live Monday through Friday, and then also I just recap at the end. Saturday is our linking video. That's the main video. So if you're new, welcome. But that's the easiest way to follow along, and we've been doing it for some time. It seems to work pretty well for people. So let's get to it. We could see how we're holding in this level very, very clearly, right? And we talked that we're seeing a shift. Now, sadly, I'm seeing another shift that I'm going to talk about, and it's more of a, let's refer to it as gamesmanship, because there's not really another way to refer to it. I'm going to show you what that is in a little bit here, but I really want to focus on these levels so you can see that we never really got down to that main level. But the ES or the S&P 500 did. Now, what we looked at too is we talked about the bond market and how we had to watch that today, and we marked off that key level here on the 29th, and we can just see how we're playing out there on the 5 minute from that period on, which was a what? Bond auction, and how we lifted into that. So I don't really want to get into, do we need to be experts now on the Japanese government bond market? Because the answer is, not really. Just understand that this is really what's causing the pressure. And so if we understand what's causing the pressure, then we can monitor it. So I'm just going to show you this on a 10-year, and you can see this getting over 1. And so what people don't understand about this, I'm just going to walk you through the basics of it. If this goes higher, if Japanese yen goes higher, the yield goes higher rather, what happens is this puts a lot of pressure on the underlying trade. Now, the underlying trade is you sell these bonds and you buy Treasury and you get the yield, right? And that's what you're doing. You're selling these bonds and you're buying the US Treasuries. You're using this as collateral. It's all fun and games until this starts spiking up. Once this starts spiking up, the yield changes, and then you have to unwind the trade because of margin requirements and also because the trade gets more expensive. I can get into this on Saturday again. We went over it last July in a video, which no one's going to be able to find. But I want you to understand what's happening and why we're there. This also ties directly into when we look at the 10-year. Let's clean this off. And it ties directly into when we talk about equity risk premium. Bottom line, you want a good demarcation line. You want an easy way when you're sitting there going, what is he talking about? Over 450, bad. Okay, that's all you need to think about. If we're over 450, bad. When did your trades just start getting higher? Around Tuesday. Why? For over 450, say it with me, bad. You need to watch the demarcation line of that 450 and go from there. If we just drop this down to the simplest way to look at this chart and just pop in something as simplistic as a 12, a 22, and a 55, which is what I use. You should use what you're comfortable with. You can see very clearly how that's playing out for us. And this is really important to get. This is becoming the driver again, and this falls us right back into the macro theme that we just started getting out of. Every time we get out of it, they pull us back in. Now that's going to lead me to talking about the 10-year here and talking about macro and what we have to focus on. And this is really important. Macro, fundamental, technicals. So this is how we view the world, and I'm just going to leave this up here. This is the market in and of itself, and this is us as traders, right? Our interaction with the market. And sometimes we're focused on the macro leg, sometimes the fundamental, and sometimes the technical. Well, with NVIDIA, we shifted back to the fundamental, and that was nice for a while, wasn't it? And then we were playing the technicals, and now we're back to this macro nonsense, which we have very little control over, but it's really important to get. If you don't understand the macro and what's going on here, and you're trading against people all day long, you are at a huge disadvantage. You have no idea why the market shifted at 12 o'clock today. You have no clue as to why that happened. The easiest thing I teach people like in the community, and I also do in these public videos, if you haven't noticed, there's a very simple chart that I use to explain this to people. I'm going to pull it up right now, and just really what it is just showing the integration between these. So let's just drop this down, and you can see it for yourself. And what you're going to see again is what happened at 1 o'clock today. Well, you had a bond auction, shocker. So when you had that bond auction at 1 o'clock, how did that go? Not very well. So what happens at 1 o'clock? And let's just walk it through. And I know if you've heard this before, but you're going to hear it again. Bond auction doesn't go well. Yields go higher. What happens to the dollar? They buy the dollar if yields go higher. So they're selling bonds. Yield goes higher. Dollar goes higher. Equities drop. And that's exactly what happened today. Matter of fact, if you really just do something as simplistic as take this entire chart and move it to the 1 o'clock, you can see that pretty clearly on how we spiked. You can see what happened with the dollar. And you can see what happened here with the S&P since those dates. Very simple way, really easy way to look at that. And you can just see exactly how it plays out if you look at this on a long-term chart. Tie that all together with what we have going on out there, and we are seeing some nutty stuff. Now, by nutty, I always want to refer to, we're going to start here, and then we're going to really dive into some of this stuff and talk about this shift. So does ANF sell so much stuff that they deserve to be up here? No, this is a classic short squeeze. It is nothing more, but this is the froth that you see at the tail end of a move. And that is becoming troubling to me. I'm having a lot of fun with it. Now, today was great because we were able to actually buy this off the open and trade it out. And I couldn't believe that I was up $18 on a retail name. And then when I realized here, obviously, who cares? I mean, I'm not going to be blunt. If I make $18 in 15 minutes off a retail name, I could care less about this. But I will cover this tomorrow. For time's sake, I'm not going to cover it today, but it falls directly into one of the patterns that we are consistently using. And I just want you guys to be aware of it when you see it live and see it in action. But this is a perfect blow off of somebody that just got squeezed. And that is what you refer to, and we refer to in the industry as a buy-in. Now, let me just show you how this works. Somebody gets a phone call, they have a margin call, and they're not either answering or they can't meet the requirement and they're hemming and hawing. And then you know what they do? They just buy them in. They're like, we're not taking the risk anymore. You owe us X. And if you can't meet the margin requirement, we are going to buy you in. It's not a coincidence this happened at 150 and didn't happen later or earlier in the day. Gave them some leeway and they're like, we're not playing this game. And so what do? They buy them in, they get squeezed, and that's just the push where they just say, give me everything and we're getting out. And that's what happens. And we never really got above there. And then you can see the lower low here in the day. So I was able to capture the long. On the short I have on, I actually did put a short on. I think I'm flat to down a little bit on it, quite frankly, but it's not really doing or falling apart like I want to. But tomorrow's another day, and then so is GDP, and we'll talk about that. But when we see this kind of stuff, we have to realize this is the tail end of moves, this level of froth. And I tried to get that equate yesterday when I was talking about NT or NDTH. And we looked at this move yesterday from Tuesday, and they haven't updated this chart yet, which they need to do. But really what this is telling us yesterday is the fact the NASDAQ 100, 200-day moving average, you're actually at a point here where you actually went down while the NASDAQ went up yesterday. If you take a look at the NASDAQ and how it went up, that's definitely something that you want to pay attention to. And I don't know why that's up, just ignore it. But it's certainly something that we have to focus on. Why are the underpinnings getting worse and certain names exploding to the upside? Now, yesterday we reviewed this on the NASDAQ, and today we're going to review this on the S&P. And we can see the red in here and how we were increasing, meaning the new highs, new lows. So this is new highs, new lows, and this is how it's supposed to go. If you're hitting new highs, new lows, you're supposed to be going up. We're going sideways, but what's really happening here is the new high, new lows are actually dropping. And that's not what you want to see. So this becomes an issue. The bigger issue for me in looking at the whole market was this yesterday, and the fact that, forget this for a moment, watch this. We broke the 55 yesterday, and this also is not a good sign. So these are signs out there. Say you broke the 55 and then gap down. And it's crazy because I looked at this yesterday and it was almost too perfect of a short. You can see how it played out today. But more importantly, it's telling you that you follow through, and why this is happening is the stronger dollar. And then we look at the dollar, and the dollar is what? Back above the 55. And we all know that GDP's tomorrow. Now in front of you is a website. This website is called tradingeconomics.com, and here's the calendar right up here. I don't care which one you use. This is a free one, and I'd like to show some of the free sites. But if you're not looking at these bond auctions and then what's happening to the market, you're at a huge disadvantage. So we look at this all the time. I would strongly suggest that you look at this as well. It is basically it's almost laughable that people don't look at this, because this is when you're seeing the big shifts in the economy more than anything else. So it's definitely something that we want to watch, and we want to see how that plays out. But for us, not only there, but there's other things that we want to focus on here. For example, if we take a look tomorrow, you have GDP. And here comes GDP, 3.4, 1.3, 1.6. All right, so the growth, 2, 3.4, 1.3, 1.6. What are we looking at? They're predicting from the previous 3.4 that you're supposed to come in at 1.6 tomorrow. And I got to tell you, that is a god-awful number if we come in. That is like almost a recessionary number. So it's definitely going to be an issue for us if that's what happens. And it's certainly something that we're going to want to pay attention to. So please keep that in mind. We definitely want to pay attention to that. We don't want to ignore the GDP tomorrow. That is for sure. So we're going to watch 39,394, and that's going to be the profit side. GDP price index quarter over quarter, 173130. Initial jobless claims, I don't really care about. You got to watch the GDP tomorrow, and we have to watch how that plays out. There's very little to say about that. Core PCE prices. Now, this is where it gets super interesting to me, and I'll explain why. Because the consensus of GDP is supposed to be down, and then at the same time, PCE prices are supposed to be up. Then you get into GDP sales, we get into pending home sales. I'm not really worried about that. I'll show you where I start to get concerned. And you're going to want to watch, obviously, the bond auctions, but let's get into the details. PCE, if we have a super, and I think this is where they're going with it, if we have a super weak GDP, okay, which would mean that you're not growing. Now, to put it in perspective, anything over 1.5 is almost considered negative, just to kind of get that out there. 1.5 is considered pretty much negative. If you go out there and take a look, and we should probably focus on this for a second because this is important. Look how negative they're talking about this growth being. Like it's bad. And when you see that, you don't want to ignore it, right? Like you don't want to say, oh, that's good. And I'll show you why in a moment that it's not great because we're paying the price for it tonight. And I'll show you that in a moment. And we're going to get into some details here. So, because I want you just to be prepped for tomorrow. And then here's core PCE price index. Okay. See how these things are they're all higher? That's not realistic. It's not realistic that prices are going to keep going higher and GDP is going to drop. That is a massive issue. And that is one of the things that's scaring people when they're starting to say, well, what about stagflation? And you have to look at this and go, yeah, this is an issue. And then this takes us right into June. Now, I don't want to get too ahead of ourselves because we're doing it on Saturday, but what if ISM manufacturing starts coming in high? Like we just saw the S&P manufacturing coming in. On top of that, this can go the exact opposite way that we think it can. Before that, and I'm getting ahead of myself, but I want you to understand you have a double whammy ahead of you. What's the double whammy? I'm glad you asked. If this comes in light, and then after that, this comes in heavy, we have a problem. Now, overlay that with the dollar will go higher, yields will go higher, as you now know, and then the S&P will come in. This is where it gets super complicated from my perspective. And then I want to talk about this shift. And you need to watch this shift tomorrow. So what we do every week is I put out an earnings this week list, and then we break it down. And so what I want to do is just go through a couple of these names with you so you can see what's happening overnight. So we're going to start with CRM. So CRM is currently at 226, down 50 points. CRM is one of the backbones of technology. Of the technology companies in the world, CRM is the backbone. Lowered guidance, missed revenue, missed earnings. To me, it was a disaster, right? This actually, to me, was a miss when you start really digging into the number and how they actually showed the beat. But let's give them that, okay? And let's just say they missed on the revenue and they guided lower. And look at them, they're down $50. I actually shorted this after hours and still made money after this. Right? Because it was a very specific pattern. You just watch the 1 minute orb after hours and it was on. Everyone would go, oh, I missed it, but it's a very simple trade. We can walk through it another time. I want to stay hyper-focused so that you're prepped for tomorrow. So that is not ideal. But, oh, well, it's just maybe it's one company. Well, is there another company that does something similar to them? Well, there's a company called Workday that does something similar to them. Well, how do earnings go for them? So as much, and this is what I'm trying to get through to people, as much as I like NVIDIA, okay, as much as I like it, and it's going to be a beast. It's going to be a huge company. It will be the biggest company in the world, in my opinion. I've been saying it for years, over a year and a half now. But that doesn't mean that everything's going to work, right? So that you see DELL trading up and how DELL ran into the close. And we're going to talk about this and what I think we need to be really cognizant of because I think the game's changed. And I want to get this point. Let's go through some of these other names that are supposed to be big players. Well, Path is supposed to be a big player out there, right? Path is down 30% after hours. You come here, decent beat, missed. So then you start going through, well, NTNX, well, they're in the right space. They're in the AI space. They're in data storage, right? We can kind of go through that, look through the whole thing. If you're selling for data centers, you should be going up, right? And then you see the revenue and you see the beat. Well, that's good. So that's a decent beat, but the stock's down. Why is the stock down? They lowered guidance. So what kind of company that's in data centers lowers guidance? And this is kind of the stuff you have to look at. So it sees 213 to 214. The estimate's 214. Sees fourth quarter revenue, 530, 540. The estimate was 546. So what's going on here? Well, someone could say, well, it's this other company and they're going to take business away. Is that what's happening? Because right now you're down and you're down about $9. And if you go through these names in general, AEO, we could argue that it was about time one of these companies actually missed. But then you look at even names like Agilent, which are just the backbones of a lot of tech companies. You're down $20 tonight, right? The only really upside that you had was this OKTA. And quite frankly, I think it was a decent quarter, but I think that that's weighing on them. So where's the growth that's being spread via data centers on all these companies? Is it being bottlenecked because of NVIDIA? Right? Is there not enough of that to go around? So where I start to get concerned is this kind of stuff, and I'll show you why I get concerned. I'm always looking for trend changes. So we have a position in Dell, and we've done very nicely with it. At this point, I think we're up about $40 in it. Going into earnings, I have way more of a cushion than I need to hold. I need at least 10% to go into earnings there. But if I look at this and I watch what happened at the end of the day, this becomes a concern. And then you're saying, well, why would buying at the end of the day be a concern? Not the 3 o'clock on, but you see this at the end of the day, this last 5-10 minutes. As we start to evolve as traders, the market starts to evolve as traders. And what we're noticing is, if we're noticing it, institutions are noticing it. And I want you to watch this tomorrow at Thursday, and I want you to watch it in the close. And then I want you to watch how they open on Monday, or I'm sorry, on Friday, because I noticed this. Watch this right here. Let's just flip to it. It'll be easier. Watch this huge buy at the end of the day, and then watch how we opened. That's not normal for that to happen, for us to gap down after being like that. And a lot of me is thinking that they're starting to set us up. They're starting to have that change because we know they're waiting to the end of the day before they do anything. The majority of movement is really happening around the bond auction. But what we're starting to see is we're starting to see a little bit of a shift here. And I just wouldn't sleep on it. So what I would do, and what I would advise you to do, or think that you may want to do, is just start watching that shift at the end of the day and seeing how it goes. Because as we get to these levels where you're seeing, the Abercrombies of the world just happen to go up $50 because somebody bought a t-shirt, it's a lot. It's a lot of a move, and it's very clearly just squeezing shorts. And we're not seeing the broadening out on the AI side, and you need to see it or we're going to have problems. This also would remind me of just looking at some of the other sectors. Like if you look at IGV, which really you need the hardware, right? You need the tech, and they call it software too, and it is, but you really need the underpinnings of these names if you're going to put semiconductors out there, right? If you have semiconductors and they're going to rip like the socks, well, where are you putting them? You need IGV, right? I mean, you just can't walk around with a semiconductor. It's not really going to work for you. It has to go somewhere. So I think that this is an issue, and I don't think that we should just ignore it. Now, we went through more of the internals yesterday, so I'll link that video at the end if you want to watch those. I don't want to go over it again, but I wanted to be hyper specific. I really did expect a much better quarter on a lot of these AI names, and we're just not getting it. That's it.